This conference will now be recorded.
Good morning, Jen. This is Frank, Clueless Day Trading. It's approximately 10:32 a.m. on June 23rd, 2019. This is a introductory second, the second of the two free complimentary sessions that are offered to our new members, and on their choice, they can certainly sign up for the advanced coaching sessions, which are far more detailed and far more strategic in helping our members achieve what they like to achieve, which is make more money trading U.S. financial markets, primarily through options. And of course, we trade both stocks and options. Full disclosure, this is purely for financial education, not for solicitation or service. And we have a great new member, Jenny, here in attendance today. A session will be recorded. It will be, this particular session will not be put out there immediately, but probably in the next day or so, because this is a free session, so other new members can listen to it on some of the explanations that we're doing. And that's put up there on the Google YouTube channel. You're certainly free to ask any questions you'd like. And for the next hour or so, we are going to cover a bunch of things. In this particular case, we're not going to talk about, we're just going to explain to you the real-time content that's delivered on the real-time Twitter feed. Fair enough?
Yes, sir.
Okay, sounds good, Jen. All right, so let's kick off. So one of the things, as I was saying, one of the things is the market's volatile. You can't run away from that. Technical analysis in itself will not save you from a quick 40-point drop in the market if you're rushing to go in and out of a trade. That's something you have to do depending on your time commitment. And talking about people who basically like to close some of their positions at the end of the day, which is completely fine, because the market's being extremely volatile. It is never, ever, and now more so than ever, a straight line. So if you're up on something a lot, you want to take down the profit, hey, totally up to you. Next morning, the markets can gap open 5, 10, 15 S&P points on some positive development, in this particular case, in China or something like that on the trade. And you might say, hey, why the heck did I sell at 4 p.m.? There's nothing around it. It is your choice how you want to manage your trades. Trade management is a critical factor. It is a critical factor. You can make a lot of money, and the market will certainly attempt to work very hard to take all that back from you. That is the biggest obstacle for any trader. I don't care whether they're professionals, whether they're amateurs. You have to know how to trade manage. And the easiest way to do it is if you have a couple of contracts, not just one. If you have one, then you sell it at the end of the day because you're up on it. And if it goes up another 40, 50% at the open the next following morning, like you have these gap opens like that, we have had a lot of these, then fine. You left another, 60, 70, 100% on the table. If you have more than one contract, multiple contracts, you can maybe sell one and keep one. So that's up to you. But that's the simplest way of the trade managing the of any position. Now, whether or not you're going to hold something overnight and feel somewhat on a probability standpoint comfortable, all depends on the charts. All depends on the charts. And even then, the markets are volatile. But the charts, and this is what I'm going to show you very quickly before we get into the Twitter feed, and then we can flip back to a couple of stocks that we're looking at that we have been trading very effectively, is reading the simplest way you can read this particular style of chart, which is done on investing.com, is look at the external chart and then you look at the internals. Now, I write down, as I'm going to show you on the Twitter feed, whether something is overbought, oversold, but I can't do it on every single post that I do because that is not just repetitive, that's almost childish. So, but there's a lot of things happening here. There's a lot of things happening here, and some of these things I am going to talk about tonight at 8:30 p.m., most probably around 8 p.m., or if I'm running a little bit late, 8:30 p.m., which is the very important strategic weekend webinar that I'm going to talk about some things that are happening that if triggered, not only are we making new highs in the market with absolutely no excitement whatsoever from both the large players, the institutional Wall Street firms, nobody's excited, and the individual retail trader is certainly not excited because they missed almost 90% of it, or they missed a whole 100% of this entire move. And that's a fact. So saying all that, there's certain things happening technically in this picture and some other charts that I'm going to show, which are telling us that the uptrend is still intact. that is, for a novice person out there who doesn't understand charts, they're like, what are you talking about? The market's a new highs. Of course, it can't go any higher. That's the first thing from a behavioral standpoint that goes through somebody's head. Somebody who is not a technical trader, somebody who is not tuned in with the internals of the market. So they'll say, yeah, market's at all-time highs. This guy must be out of his mind. Of course it can't go any higher. Well, they said the same thing, and this being a daily chart, these people, and that's the majority of people, said the same thing when the market was here, when the market was bouncing back off these horrific lows on December 24th, or when the market was bouncing back from the first week of March. That was a new high.
Mm-hmm.
Oh, the market can't go any higher. Nah, are you crazy? Yeah, right. Okay. Market kept on making new highs, new highs, new highs, new highs, and then it made a new high back on May 3rd, I believe. It was May 1st, May 1st, and between May 1st and May 3rd, it says May 1st here. Yeah, and then we had a corrective pullback in between, sharp couple of 100-point type of reversal moves, all within the context of a structured framework. You can clearly see that. My job is to draw these structures so that you can see where you stand. And now the markets, as of last week, made another new high. It actually went above that number, slightly above that number. So what gives? So the bottom line is that's the what I'm trying to explain is what we could do here at Clueless Trading. We look at the market in a truly in a very surgical, robotic way, so that we can decipher what's going on. And most of the times, big money is made before it happens. After something happens, anyone can say, "Oh yeah, sure." That's not the way we do it here. We The way we do it is I show what's the higher probability move of what's going to happen, and then you basically use your own decision. The decision is always yours to pull the buy or sell, hit the buy or sell button, and you either do a nice long swing trade. This is a beautiful swing trade, still a swing trade, and not make excuses. A lot of traders do. Oh, I'm so busy, I can't do anything. No, the only thing that's busy and stopping me from doing anything is just the mental demons in your head. It's really as simple as that. Buying one contract and leave it out there to run its course in over a week to 2 weeks time doesn't take a huge effort. It just takes a mental decision to say, okay, I'm going to do it. So that's what we try to help people with. So anyway, so what this chart, for example, is a daily chart. It's showing you what's happening on a daily basis. This is probably one of the, not probably, the strongest move. Even though we had the same type of move between March and May, this one in the period of time, just in the month of June, this was June 3rd, and we pinpointed that. We were buyers here. We were buyers on June 3rd. Anyone can go through my videos on Google, YouTube, and listen to what I said during that time. And of course, scroll down, spend a few minutes and scroll down the Twitter feed. You can see what we're buying that time. And then we had a humongous rally. And after the third day, the confirmation happened, and see you later. Then we had a 3-day corrective move, and this now. And we still have a little bit more room to move, even though we are severely overbought. It doesn't mean we need to have a corrective move like that where the market drops 1,000 points right away. Sure, it can happen, but those are things that we will certainly alert people, hopefully, before they happen. So, saying all that, this is your daily chart, and this is what it looks like. Meaning, this is, each of the candles are 1 day, and from a swing for swing traders, these are the charts you need to concentrate in, because these are the charts that keep you in the position. Because one of the biggest mistakes every single trader does, every single retail traders and other institutional traders do too, is not that they lose money by not selling. They don't make money by not buying and holding on. And that applies to everybody. That even applies to me at certain times where I am constructing these charts. These are so powerful, so predictive, and I am not holding the entire or the larger amount of that position because I've done so well on the first leg of the move that I'm most probably out of it here, and then it goes up another 200 points. So the key is it's not what you or it's not what you buy, it's when you buy, it's actually when you sell. And this is a bull market, full scale bull market. It's been going on since 2009, and nobody's been happy about it. Everybody's complaining all the way to step forward, and they're still complaining about, moaning and groaning about it as we move forward. So the point is that from a standpoint of, what was I going to say, on a standpoint of as I always said, uh, most, oh, this is what I was going to say, was the biggest money is made on the upside. Because if you shorted here, you had no guarantee that the market was going to fall and retest the March lows, because in between this drop, there were sharp moves higher. So anyone who lies and say, no, I knew the market was going to go lower, they're completely lying. So what we do is we take short-term profits, mostly intraday or sometimes overnight, on these corrective pullbacks, which last a whole bunch of days. Because when you have this type of 400-point pullback and you go short the market, you wake up next morning completely decimated, because those puts that you bought and the markets open up 300 points the next day, you can see that. Those puts that you bought on with a feeling that, oh, definitely the market's going to go lower, that definite becomes 0 to 0, because the next morning the market opens up 150 points, and for the following 2 days goes up another 300 points, and you feel like, what the hell? And when you say, right, what the hell, then the market starts selling off. So that's where technicals come in on a big way. Anyway, saying all that, should your daily chart, this either keeps you in the game or keeps you out of the game. Second is the intermediate term chart, which we call the 1 hour chart. Now, one thing I missed here, I'm going to start off with, I showed you the daily chart. I'm going to show you the weekly chart. Let's say somebody says, okay, I understand the daily chart, but daily, a lot of things happen. What's happening on the weekly? So I can look out there and say, hey, can I still buy those dips? And of course, this is a simple way of looking at it. A lot of stuff happened during the day, and of course, I am always guiding my people right, left, and center on what is going on. But the weekly charts, which we're going to talk about tonight, also give you a pretty clean picture, from a technical standpoint. And remember, there's always black swan events. There's always a tweet that might come out from President Trump, which is very hostile to China or Europe. There might be a hostile comment, coming out of China, saying that they are never going to give in and fix a lot of the issues that are at hand. There could be all kinds of stuff. So those things those things we have to live with. That's part of life. That's part of trading. But aside from that, from a pure technical standpoint, this is your weekly chart. This weekly chart is one heck of a bullish chart. Okay, and this one, I'm not going to get into the details and stuff. A lot of stuff here, if you just look at the stochastics and you look at this is not telling us that we are in imminent danger of falling 2,000 points or 3,000 points down here. Okay, so that's it. So this is your real long-term picture. Not real long-term, but long-term picture, the weekly chart. These candles are 1 week. This is your sorry. This is your, what happened here? I was going backwards. So this is your weekly chart. This is your daily. You are following the screens, correct, Jen?
Yes, I am.
Good. Because sometimes it takes about 3 or 4 seconds to refresh on your end. Are you on a small screen or a big screen? What kind of screen are you looking at?
No, it's a small screen. I couldn't get my big screen to work.
So what do you say small screen? What are you looking at, an iPhone?
No. Like 16.9.
Okay. I thought maybe you're looking at iPhone. Okay, not a
No,
problem.
no.
Okay,
Hmm.
sorry. So, um, So that's your daily. Let me take this out. This is your 1 hour chart. Nope,
Mm-hmm.
I apologize. This is your 1 hour chart. You can see what's going on here.
Mm-hmm.
It's a nice clean uptrend with all the lines drawn, and those we'll cover on the ACS sessions. This is a rising wedge. Rising wedge is always correct. So we know the levels it's going to come down to. We know the levels it's going to come down to. We know the levels that if they truly break, and let's say somebody who had no idea about technical analysis, all they have to do is just look at these arrows. These arrows are telling you, a blue arrow is showing you where the support levels are, where the buy
Mm-hmm.
programs will come in, just the way it did here at 12 noon. And then this will tell you that if it breaks, simple logic, that means we have a chance. Everything is a probability game. There's no guarantee, but there's a good chance. And there's a lot of different indicators that I follow. I actually follow about 32 of them, but I only show maybe 3 or 4 of them because I like to keep it simple so people don't get that confused. So, and my job is to analyze that stuff. Comes somewhat naturally after doing this for quite a long time, and then I make a determination whether or not it's a high probability breakdown or a high probability break up or break out, as we call it. So the red arrows basically say that if it breaks this level here at 29.37, it's going to fall. Why is that important to a lot of traders? Because you don't need, let's say if you're trading the SPYs, this is very important because this is the futures directly correlated with the SPY. And if you have stocks and stuff out there, you know that where you need to basically keep it a little bit, get a little bit more cautionary. And that's the reason why these charts are put in place. And then you have this arrows again, where the big support levels are, and all kinds of stuff. So this is your hourly chart. Each candle is 1 hour, and you can see here a pattern all the way from the humongous rally that started on June 3rd. So in 20 days, well, 20 calendar days, it's more like 14 or 13 business days, trading days. You have this is what's going on. So it gives you a clear perspective on what is up. This was the high. This was the high, and this is where we are. We overshot. You can see that spike during the day, where we went up to 29.68. We actually made a new all-time high, which I've been talking about for weeks and weeks now. And I believe that we'll make further all-time highs, but we shall see one step at a time. So this is what it looks like. The most active chart, which is basically each of these candles are 15 minutes, is what happens during the day. And this keeps this, it's for day trading primarily. And basically that's what it is. This is primarily for day trading, or if somebody that has time, wants to manage their positions that they have, and keep an eye on this and not freak out. This is actually the non-freak out chart. Now, what do I mean by that? Okay. This is the chart which tells you that each of these moves that happen very suddenly, all of a sudden there could be a big sell program that comes in. It doesn't always have to be news. News is after the fact. The market does the thing and then looks for news to hang its hat on. Or or unquantifiable events like a powerful tweet out of President Trump, or a very powerful comment, hostile comment coming out of the Chinese trade delegation, blah blah blah, all kinds of stuff, or anything, okay, or a Federal Reserve comment. Federal Reserve Day is, we know that, or any other day, Federal Reserve governor makes a speech and says something which the markets like or don't like. This is the reaction to it. So this is a non-freak out chart because it tells you, pretty much tells me and tells my tactical traders and my members, both old and new, that hey, yeah, it might not feel good, but I need to freak out because this is the range. There was a big sell-off at 3:45 on Friday afternoon, and that had directly tied in with a big sell-off, meaning I think the market reversed 50 points. The Dow Jones did. That's because it was quadruple witching. Quadruple witching is the actual definition of that. You can always go to Wikipedia and learn it. You should know that it happens once every quarter. This is the end of the second quarter coming up. Quadruple witching doesn't happen every month. Triple witching happens. But quadruple witching is not about 4 witches flying all over Salem, Massachusetts. It's basically stock index. Quadruple witching refers to a date on which stock index futures, stock index options, stock options, and single stock futures expire simultaneously. That's heavy duty business. And if you want to know the definition of that a little bit more about how the derivatives basically balance themselves and stuff, I'm not going to get into it right now. I'm not going to get into it, period, because that's all like really mechanical stuff, which really doesn't matter to us, but it matters to the market because it creates volatility. That's why after the markets, I had to leave at 3:15 p.m. on important appointment, and then at 3:45 you saw this big sale program come in. So if you were just a novice, if you're somebody who's not following my real-time Twitter feed, you're like, what the hell? What happened? You know, the world's falling apart. Nothing. It was quad witching, and a lot of programs went into effect. I think we have to wait for Jen because I think her internet connection dropped. So we're just going to pause for a second. We're just going to pause on this section.
This conference will now be recorded.
Jenny, are you back?
I am. I'm here. Apologies.
I know. No problem. It's not your fault when the connection is weak. Okay. So which part did I lose you on? Did I was talking about quad witching. You heard that part?
I did not.
Okay, so I didn't know. So this let me recap back. It's on the recording. You can always loop back, but let me just recap back. So this
Okay.
is your non-freak out chart. This is basically not just for day trading, but it gives you an idea that if these big volatility moves happen, 50, 60, 70 points, that's not the end of the world, where those levels are and where the market will bounce from. Pretty much exactly. Okay, you can see that happen on it happened on Thursday, on Friday there was this is what the markets were trading in, and then all of a sudden at 3:45 this big sell program happened. Now this happened primarily because it was about quadruple witching. When I pulled in the definition, were you here at that time or were you not connected?
No, I was not connected.
Okay, so quad witching, like I said jokingly, is not about four witches flying over Salem, Massachusetts, and heading towards Florida. This is quad witching is basically a date happens once every quarter. This is the end of the second quarter is coming up for U.S. financial markets. End of the second quarter is June 30th. Well, not June 30th, June this week on June 28th, and so bottom line is it refers to a date on which stock index futures, stock index option, stock options, and single stock futures, that's a lot of derivatives, okay, expire simultaneously. So it's known as quad witching or quadruple witching. So the witches go wild. So they went wild at 3:45 and the markets dropped, I believe, 40 or 50 points all within 15 minutes. For somebody who is not looking at my Twitter feed, they will be just, what the hell happened? The world's ending. Nothing. It was a pure technical program that went into effect because of those four factors: stock index futures, stock index options, stock options, and single stock futures expired and rolled over for the following 3 months and the following months, and that caused massive volatility, which caused this selling. So this chart tells you where we can come down to. And then this keeps you. This is the non-freak out chart for people who are watching the market intraday, and you can basically see that each of these levels and what the structure is. Fair enough? Any questions?
No, sir.
Okay, sounds good. And feel free to stop me and ask a question. It's for your benefit, not for me listening to my silly voice. So this is basically it. Now, so this is your short term intraday. This is your 1 hour chart. This is your real swing charts, the daily. What's it looking like? Nice finish, nice bull flag. This is your weekly. And as long as the body of these candles are this big, that means trillions of dollars have entered the market and they're staying in the market. When it gets like this, like it did the previous week, the week of the 10th of June, that's a red doji. That's the time that we had 3 days of a corrective move. Look, this doji was this. And we were staying above the 50-day moving average. Different things were happening. I said, it's going to be okay. It's going to be okay. Relax. But those are the times that I have to do extra work. I'm always doing extra work for my members because we don't know at that point whether the doji, which simply means indecision, and a red doji on top of that, will turn into something like a pullback and create another bull flag, or whether, and it did. It created a minor pullback. Everyone freaked out out there, and then boom, it went nuts. So that's it's the beauty of it's really it's a totally technical market, and the beauty of understanding these candlesticks is extremely important. This was telling us also, well, I'm not going to get into that, but I always do. This is telling us that it wasn't going to be a breakdown because the stochastics were open and just moving higher, and that's the easiest way you can see whether or not you're gonna whether we're going into a protracted downtrend where it's breaking down, or whether we still have room to move. It clearly shows here we have still room to move. You understand that part, right? Right, Jen?
Yes, I do.
The shape of that, it's a gaping, the crossover is still up, what we call crossover up. Okay, now let's talk about the Twitter feed.
Okay.
The Twitter feed consists of many different things. In fact, the Clueless A Trading Twitter feed, I am happy to say, I'm proud to say, is probably the biggest and continuous learning tool that anyone can find out there. It's a fact. Why? Because it encompasses powerful trade alerts. It encompasses very important pieces of knowledge that you need to have as a trader. That's why I put some of these articles out there. You don't necessarily need to open it and read all of them. Sure, you can read a couple of lines. Just read the headlines if you want, if you're that busy. Okay? I'm talking about anyone else who's going to listen to that. So my thing is just open it up and just click it, and it takes you to that article. Read it quickly, because the more informed you're about the market, the better off you'll be in it as a trader. I'll tell you that right now. Some people might say, nah, that's not true. The less you know, the better. Sure, you can, but then you're just throwing darts against the wall, okay, or against the board, whatever. If you want to hit the bullseye here and there more often than not, you gotta be informed, no question about it. So, bottom line is, my Twitter feed is a valuable resource of knowledge. If somebody is very busy, let's say they can't trade for a couple of days for whatever reason, which I don't agree with anybody, can always buy one contract and just leave it there, and with a sell or with a sell stop or a sell order out there and let it get hit. You can always put stops on your options too. You're going to be fine. You know what your losses are and you know what your gains are. So anyway, then all they have to do is scroll down this feed. There are amazing articles, not like a freaking stupid newspaper article I want to keep everyone busy on, but these are directly tied in with trading. What happened in the last 15 minutes? I put out the trade. Even though I was out, I sent off my iPhone. The raucous market close looms as quadruple options witching set to royal stocks. That's exactly what happened in the last 15 minutes. So it's no longer a mystery. This is when I had to leave. So a quick notification. Before I left, I've been showing this chart. This is what the market looked like at around 315. Looked great. New all-time high here earlier on in the day. Nice ascending triangle. You can see that. And we were poised to break out before the program hit at 345. Right off this level, right here. So it basically went up here and then boom. In 15 minutes, you got those big derivative programs, all the options expiring, all kinds of stuff as the four on the quadruple witching program went into effect. Okay, so that is your 15-minute chart at ES15. SPX means S&P 500. ES is obviously futures, 15. Why do we use futures a lot? Because number one, we have a bunch of futures traders. Number two, futures are the determinant of what's going to happen on the front end. And it's the ultimate proxy for the market. That's the reason why I show the futures chart. The more you make friends with these charts, the better off you will be in handling your trades on the other side. Because futures trades pre-market, after-market. They're the most liquid instruments out there, so they move the fastest. They're the first to react on good news or bad news. It's simple as that. So ES15, that's what it means. SPX ES15 tactical roadmap, monitor and manage your own trades. That's why MYOT. Any of our new members or older members who don't understand a particular term, DM me on Twitter, direct message me and ask me what it is. I still haven't found a great developer to go ahead and really fully update my website. I did have a dictionary in there and stuff. It's still there for all the terms that I use, but I am working very diligently, all of you can be assured, to really update and upgrade my website to a more streamlined version, version 2, which will have all these easy resources to find. Anyway, working on that. The IBB is basically the biotech index, but I even write down biotech index, told people to add the July 5th, 109 calls. These days, a lot of the times, I even put the approximate cost at that time that I'm putting the trade through, $1.60. So if it moves to $1.80, doesn't mean you can't buy it. If it moves to $3, yeah, maybe you need to reevaluate whether you're going to buy it. But if it moves if it's at $1.60 and it moves a range of 20 or 30%, if it moves towards $2, you can still buy it. If it jumps up to 4 by the time you're looking at the tweet, then obviously you'd have to make a determination whether or not it's worth buying it because it's moved up so quickly. So this is a fantastic chart of the biotech index. And this is a longer term chart. This is a 15-minute chart, but you can see here what is happening. And the biotech index has been doing extremely strong. We have done very well in a whole bunch of biotech stocks, including, they're not biotech, but they're HMOs, the health management organizations, our insurers, we all know, pay out of our pocket, is Humana, United Health, Anthem, all these great. And then we have had many other biotech stocks which have done very well. I trade selected ones, and but this is the biotech index. Somebody says, no, I don't want to bet on the individual stock. I just want to buy the biotech index, IBB. This is your chart, and this is telling you it's looking pretty damn good. And each of these things are, for all new members, I try to walk them as easy as possible for their eyes. I put arrows what the range is. Okay, so here we was on Friday. It can get up to 110.22, and I can assure you my charts are constructed to a very high degree of accuracy that it will give or take hit those levels. And if all hell breaks loose and the biotech index just goes nuts higher, then we are going to go to 111.95 within a week or less, and that's a lot. So there's your biotech index. Allergan, now the stock we've been doing well on. Options move slowly but surely, but looking great. Looking great. Look at Allergan. We did extremely well on Allergan the day before, and this is a beautiful picture of a bull flag. Don't want to get into the technical stuff, just showing you what I put out there. This is a bull flag. This looks like a bull flag, whichever way you slice it or dice it. A bull flag generally breaks out. That's a high probability trade. So if it breaks out, I have arrows where it can go, and then I have the options alongside it that I told people to buy. So if somebody says, no, I don't want to do, I can't, I'm so busy during the day, well, freaking buy a option of a week or two out and just leave it in there. And if it pulls back a little bit like it did on one candle, I'm the one doing all the hard work of doing all that stuff. So I'm putting out the charts. If I'm saying buy, you don't necessarily have to jump on everything I say. I'm not God, but I'm keeping a very close eye on these trades. So I'm putting out the charts. You decide whether or not you need to add a little bit more. So pretty, really. One of the key things that I always tell people, new members, when I talk to them, and I like to remind people over and over again, including old members, we are probably the only service out there that takes the time and energy to put out these precision charts with almost every single trade alert that goes out there, which is unbelievable. I don't think there are any other services out there. If there is, I would certainly like to commend them and send them a message, telling them congratulations, which puts out a physical GPS roadmap chart with a trade alert so people can see before they buy. This is hugely, hugely helpful, beyond helpful. It's like you driving on a dirt road somewhere out there in upstate New York, and you don't have a GPS roadmap, well, good luck. Okay, either you're going to fall off a cliff, or a wild boar is going to just hit you. You're done. Or somebody's going to come here and shoot you. Because you're trespassing on their land. So that's what I'm saying. You got to have the GPS roadmaps. The same thing with these charts, the GPS roadmaps. So the algos can trap you and hurt you as much as they normally do. Charts again. I wanted a quick picture. This is your S&P ES15, futures 15, whatever, 15-minute chart, but showing you what happened between May and June. This is actually the 1-hour chart. It's not the 15-minute chart. My apologies. This is the one I showed. So you get a bigger perspective. Okay, maybe you're down on some option on the other side and you're freaking out like, oh boy, what's going on? Well, calm down. Take a look at this. Take a deep breath. Slow down your breathing. Breathe 10 times in and out. Exhale, inhale, right? I'm not going to teach you yoga, but just control your pace. So the charts are there to control your pace so you don't freak out. Because freak out and emotions are, that's it. I don't care how smart you are, you're going to constantly lose money.
Right.
It's guaranteed, and you could be the smartest person in the world, and you're still an emotional freak when it comes to trading, because algos are designed to completely mess with your panic centers in your brain. That's what they're designed to do. And when I say algos, those are the algorithmic high frequency trading black box programs. They're designed to really freak you out literally every 15 minutes. So breathe, look at the charts, trade. All right, next. Put out a chart of the SPY, the month of June, again, so people can move back a little bit, take some nice breaths, and exhale and look at this. And okay, it's looking pretty okay. This is done off one of my other platforms that I don't trade off. I just use it for charting. That's the reason why it says paper practice. This is TC2000 Warden. You can put trades through this too, but I've never done it. I use Thinkorswim primarily for all my trading needs, as in putting in trades. This is for charting. So this is the month of June. June 1st, June 21st. This is what it looks like. So when you first look at it, you're like, okay, I see where we're going. Yeah, we can pull back a little bit and stuff. Everyone's freaking out, but as long as the channels are moving up, and we could fill this gap this week. We probably will. I don't know if we will, because that's a lot to fall, but which we shall see. So bottom line is that just a quick overview to keep people in balance. Then we have very important critical news, which will move the markets back and forth over the short term. I put out the news out there. Peter Navarro should know he's one of the trade negotiators, the economic team, economic advisor, very hardcore hawk, or some people say he's a big China hater. I don't think he is, but he is very hard on China, on business practices, blah blah blah. He's not the nicest guy in the world, and he said that it's not set in stone, blah blah blah. So, but this was actually a positive note if you read it. It says it's not set in stone that they will increase the next tariff tranche if they do it. If President Trump decides to do it by 25%, they might be, they might be flexible. Good. More breaking news, which is important to the market. A new trade that I put out there. Oops, sorry. OC, Owens Corning. Sometimes I put the, I follow three different news feeds. Briefing.com is one of the ones. Benzinga is another. Then I look at other stuff. But I saw this. I found it to be interesting. I know a little bit about Owens Corning. I use my own judgment. I said, okay, let me suggest it out there. Let's see if people want to take it. These calls were damn cheap. They're lottos. I didn't even put lottos in there. Anyway, so that's it. And then I put out a chart. Rumors on asset sales. That means they're going to spin off some of the divisions by the July 19th, which is monthly options expiration for July. Third Friday of July, 55, 60 calls. Not the size of the calls. I'm not telling you to buy 60 calls. That's up to you. What do you want to do? This is the strike price. Because sometimes I've heard, oh, you're telling us to buy, this was a while ago. It's a couple of members. I said, are you out of your mind? I mean, I've explained it from day one. My job is, I'm not your broker. I'm not I'm not telling you like what to do. I'm just suggesting that these are the strike prices, just so everyone's clear. This is the strike
Right.
price, 560 calls. Heavy activity detected on those calls. I saw it on the options table. Okay, put it out there. I like the chart. I like the chart. It's coming off the bottom. I even put arrows, what can happen over the short, over if these asset sales go through, and people can look at the GPS roadmap and not drive, all the way up in somewhere out there in Appalachia and then fall off the cliff. Okay, you know where you are before you get into that trade. And these are lottos. Just bought a few of them. So that's the same thing. Humana. So let's look at this, what I write. And this is primarily for my new members so they can understand what I'm writing. Humana weekly. Simple English. Humana weekly chart. Power breakout over. Okay, a little bit of encouragement, motivation. It was a technical motivation because it was a power breakout, not just in my head, like, oh, it's a power breakout and I see no red candle. I'm talking about about a green candle. Talking about a power breakout, this green candle, which we're going to look at right now in a minute, over LT long term, DT downtrend line. So LT is long term. That's why I said, please, while I fix my website and get to version 2, DM me or put up a question on the chat room so that I can directly respond to you and so you know what it is. So long-term downtrend line, DT line over 265.52 over this big downtrend line. We're going to look at it in a second. PT means price target 1. This price target 2. Things work out great. 281.95 price target 3, which would be beautiful. 290.46. Add. Somebody asked me, how do I know which one to buy or sell? I said, it says add. Some people says BTO, buy to open. Fine, I say add. Let me stick to add for now. Add as alerted, hashtag Humana, hashtag HMO. Let's look at the chart. Fantastic. This is a long-term chart. It's a weekly chart. Doesn't care what's happening in 1 day, 2 days, what's happening, what is in weekly. That is one heck of a bullish candle. Hopefully it'll be a little bit of an expansion. The next expansion moves to 275. We did have another bullish candle like that a couple of days ago. 1, 2, 3, 4. We were in that trade. Right after that, there was a sell-off. So even if there's a sell-off, I will look to see what happens underneath the surface. We'll go from there. I don't want the sell-off, to be honest with you. I want it to expand up to around 275, where you are going to see the next level of Fibonacci retracements, where there's going to be some selling, which is pretty much at this level where there was a whole bunch of selling back in April. Conditions are a little bit different right now. This is moving very nicely, and that's where the real chart reading comes in. If you've taken my ACS sessions or trained yourself on your own because you have some technical knowledge, then you'll be able to see the messaging coming out of the chart very easily. And people who have taken the ACS sessions really understand what I'm putting out there, because I'm not trying to put anything difficult, but in order to read the chart, I can write a whole paragraph and a nighttime story or a daytime story about what I'm seeing on this thing here. So that's it. This is 50-day moving average, which also happens to be slightly above the Fib 50. Lots of great stuff, lots of great GPS roadmaps so you don't fall off the cliff and make a lot of money. Another breaking news during the day, which was important to techs. That's why techs were weak, because bans more supercomputers from purchasing parts from U.S. companies, affects their business. Humana, again, more of a shorter term chart. In this case, you look up here and it says, oh, it's here, Humana Daily. That's another chart, not from Thinkorswim. This is from my QUODD quad platform. So you can see what's going on. Another clear roadmap that I rely by, and so do my members. Humana was, then I put alerts where to add, right? I even put alerts where to sell. Don't do it on every single trade because it's not physically possible, okay? But as alerted, explosive move higher, sold July 265 calls, 270%. Yeah, 270% from the previous day or two. That's a lot. That's a lot. There are services out there, great services. Their biggest accomplishment is they made 40% on an options trade. Our biggest accomplishment is, when we feel amazing, is when we make 1,000% on an options trade, which happens here and there. but generally anywhere from 100 to 200% is delivered every week. So it all depends. Now we are more technically aggressive. They might be technically very conservative, and they are very happy with 40% or 30%. My thing is, you can check your own risk level, your own blood pressure, and run with the trades that you want. You want 40%, they're 40% trades there all day long. You want the 200%, then you got to be a little bit more technically savvy, and you got to be a little bit more aggressive in working the charts. Okay, so I even put the sell, and then of course this is the previous. Somebody said, why is it the same? It's not. This was posted. This was, you click here. This was posted at 1:16 p.m. and this was posted at 1:14. So I just hit the tweet button, and then it's a follow-up. It's a thread, so you know what happened before. Do that a lot. Okay, here's a new one that I put out there. CRISPR Biotech. These are gene editing companies. This one came out. It had some very favorable stuff going on. We've traded this before. This is a swing chart. I'm not going to trade it intraday unless it moves big time. Calls are very cheap. They're below $2, and this is where it can go. That's a lot. $15 from here. That means your calls would be up 600%. But I'm just showing you on a swing chart because it's a weekly. What can happen if it happens? Again, the market just keeping people in line, and informed, I should say, not in line, informed. This is what was happening at during the day. Allergan again, showing people what's happening. There was a red doji when the sell-off was happening the first part of the morning, and so obviously it's showing that the market's getting a little bit tired of this making a new high. But then at the end of the day, like I showed you, that doji turned green. Goldman Sachs, a new trade. So I put it out there. Goldman looks really good. It's attacking the 50-day moving average, breakout over 50-day SMA, simple moving average, 193.33, add June 28th. It's next week, end of the month, 200 calls. Again, not the size, 200 strike, 200 call, scale in. What does scale in mean? Scale in means you got to get in there one step at a time. That comes into the trade management stand, and that's something that I teach very well on the advanced coaching side. It's not rocket science. You need to scale into these things. Or if you just put everything in one go, and this one goes negative by 40 cents, then you feel like a total, you just feel really crappy. So you scale in a little bit, and if it's moving higher, you add more. If it pulls back a little bit and still keeps an uptrend, you add more. So this is Goldman. Goldman can get up to here, which is around 204 or so, and that's a decent sum of money. Alibaba, this is what it looks like on the daily. Big week for Alibaba. Hopefully it works out. The calls were pretty cheap, and we're going to just make out like bandits because of the China trade deal. Even if he has a handshake, and President Xi will talk about all that stuff, just smiles at Donald, and Donald smiles at him, the market's going to be up 200 points, okay? And if they shake hands and hug, the market's going to be up 500. I'm not kidding. It's a fact.
Oh, no, I believe you.
So the body language is very important. You know what I'm saying? And we'll talk about that tonight. So that's it. And then we have Beyond Meat. We were short. We did very well on the first short. On the second, just a dangerous stock to short because there's so much shorts out there, and there's only 58 million shares out there. Traders who know what that means it's a very small float. So you have to borrow the institutional traders who borrow, who basically short the actual common stock. They have to borrow that. They have to pay a very large short interest, all kinds of stuff. Anyway, the chart looks like crap here. Okay. And will it go to 130? I don't know. Will it go to 145? Yeah, I think so. And we bought some calls all the way, 120, 130, I believe. Not calls. June 28th for next week. 120, 130 puts. Active traders only. Just a suggestion. Doesn't matter. The puts are $1.40. If it works, you're going to take out $6. If it doesn't work, you can get out with 50% down. I mean, wherever you want to get out. But chart doesn't look good till these levels where I would be an aggressive buyer. Just the way I was an aggressive buyer 2 days ago after shorting it, and we made some decent money on it. they went up a good 80-90% within the day. News, Beyond, Breakdown, new trade alert, OSTK. So this is what the Twitter feed's all about. So, and if for some reason you're so super busy and you are consulting with the Economic Council and you telling the world, telling the U.S. military what to do, you're that busy that you can't even look at the Twitter feed. I'm talking to everyone out there, and you're like Mr. Mr. or Miss CEO of the largest company in the world, and you don't have time. And you're saying, and you keep on making excuses. Well, then, right before bedtime, get a nice glass of milk or whatever, have some nice apple cider vinegar, which is always good for your tummy. Okay, and just go through my Twitter feed. It doesn't take much, and you will learn more about what happened in the market than watching CNBC all day long. So that's it. Sometimes I put this out there to wake people up a little bit. It's a fact. 99% of RET, retail emotional traders, that might be an exaggeration, in a state of shock and awe. Yeah, it's a fact. All right.
Mm-hmm.
And that's it. So this is my Twitter feed. It's an amazing ongoing story of the soap opera called the U.S. financial markets, directly tied in with the U.S. economy, and you can learn a lot. You can make money off this, you can learn a lot, and hopefully it'll help you be a better trader and an investor. You can take these opinions and suggestions that I have and apply them to your investing portfolios, not trading. If you have IRAs and stuff, you can basically do what you need to do. Like I said, I'm not recommending or guiding anyone to do what they want. I'm just suggesting that this is what I'm seeing, and you can do what you need to do. So, does that all make sense?
It does. I do have a question though, Frank.
Sure.
I actually do what you just said. When I don't have time at work, I come home, I pick the
I
charts
know.
apart.
Mm-hmm.
Um, since I've taught myself in the past, I tend to pick apart and then Google and just look around, but it's helped me like quite a bit. Um, but for somebody who hasn't really focused on the technicals,
Mm-hmm.
would you recommend a different platform just to do the charting that'll be a little bit easier and a bit like more clean cut so that
Okay.
you can
So
see
so
things?
so let me stop you for a second. I have no idea what platform you're using right now. What are you using right now?
Oh, I'm using Thinkorswim.
This is the world's finest platform.
I
It's
know, but
you
it
don't.
seems
What?
so
Okay. So let me stop you for
difficult
a
from the
second.
start.
Yeah.
Yes.
Okay. Let me explain to you one thing. If somebody wanted me to go out there and say, you know what, I want you to go out there and go underneath a Lamborghini Performante, okay, and take apart this and that and fix it. Of course, it's difficult. But the whole the point, and I'm going to say, what am I going to say? It's the first time I go in there, unless somebody trains me. It's really, see, well, the question you asked is a very good question. Unless you are trained, look, you're in the medical profession,
Yes.
okay? You're a doctor. You know that you just can't throw somebody into the hospital and say, okay, go treat that patient. You got to go through some very formalized training in order to treat the patient. It's the same thing with this. Of course, it's daunting. But once, and I have taught many people, look at the testimonials, and this is not a marketing pitch like some other subscription services and stuff that I made millionaires out of people. Okay, that's their business, what they want to do. You go into my testimonials, read how many, and don't, read how many people who had never had any technical know-how start to understand it from basics, and now they love it so much that they've become advanced in their own way and done very well. There are people out there from the Midwest and stuff, older members, great members, and you can speak to some of them with their permission, who basically never looked at the market the way they look at. So the answer to your question is you need formalized training, not for years and years, but you need that initial boost of formalized training so that you can look at what I'm looking at and say, okay, I get it. But looking at charts itself without understanding the construction on top of it is not going to do any. It doesn't matter how many arrows I put in there. So it's simple answer to your question, Jen, which is a very good question. You need to get that formalized training initially,
Okay.
for a month or two, and then you run with it, and you will. That's this I can guarantee. I don't guarantee the markets. Simona will guarantees the markets. Okay, is what I can certainly assure and with a high degree of confidence that once you take the ACS sessions, you will be able to, or I'll be able to deconstruct a lot of these difficult, what you find to be difficult in a much easier way. And the more you practice with it, the more you trade with it, you make money with it. It's a business of actually making money. So you look at the charts, you're making money. You look at my charts, you're making some money on it. You'll be doing your own thing, and it's fantastic. Thinkorswim is great. Thinkorswim has so much stuff in there, I don't even frigging understand. I just use it. I think I use 10% of Thinkorswim, if less, as in using all their different formats. Okay, Thinkorswim is for rocket scientists. So I'm not a rocket scientist. I'm somebody who is very well deep inside the markets. I understand the market psychology. And then I apply the technicals on it, and it is mostly a win-win situation. So Thinkorswim is great. Investing.com. Investing.com is great because it's very easy on the eye, this one, okay? And then, of course, there are other platforms that I use. Once you get better, you should certainly start using Quad a little bit, QUODD. That's absolutely fantastic. But yeah, I'm more than willing to work with you on the Thinkorswim platform and any other stuff. Yeah, so that's not a problem at all. But you need to get that formalized training where somebody breaks down the difficult stuff and makes it simple, and works with you on those ACA sessions, and then you'll see it is not hard. Understanding the market is hard. That's something that doesn't come. It doesn't come naturally to me, but I am naturally tuned in with the markets because I love human psychology and I love how the games work in life. Okay, so to me, that's why markets are fascinating. So that's why my predictions on certain things that'll happen and what the reaction to the markets will happen have been so correct. That stuff is something depends, like so that's it. Some people know more about sports stats than anything else in the world. They dream, they'll tell you which player is going to get drafted, like all this stuff. Well, I love watching, watching my favorite teams, but I'm not that. I'm this. So that's the difference.
Right.
So
got it.
next question. Any other quick ones?
No, not really. Looking forward to
Okay.
doing the ECS and
Yeah,
breaking this down even more.
absolutely. You'll find it great because look, I don't make it dry. I'm not normally a dry person. I can make this stuff like really dry, but what's the point? What's the
Right.
point?
Yeah.
Yeah, exactly. I've had enough experience in my life. I was not, I was reminded to tell people I sat with some of the biggest names when they used to host these Wall Street technical webinars and stuff. Ralph Acampora, Tony Dwyer. I know him personally. He's one of the best technicians out there. Katie Stockton, she's brilliant. Then what's the other guy's name? It's slipping my head. Then the older lady, she comes once in a while, Louis Yamada. So you learn all that stuff. Some of them are newer. The new version of technical analysis, like Tony Dwyer and stuff, pretty damn good. And my version is my version mixed in with what is happening right now. So that's all. Sounds good. So have a great rest of the weekend. If you can, attend tonight's webinar for a quick update on what we expect this week. Very critical week coming up, and then we'll take it from there. So thank you
Awesome,
for
Frank.
being a member, and certainly spread the word. We run by referrals. So it'll be we would certainly appreciate if you pass the word around, have some new people join us. All right.
You got it. Thank you, Frank. Have a good one.
Thank you, Jen. Bye-bye.